to housing markets. What's next for September? America's top portfolio managers give you the answers. Power Lunch, today noon Eastern on CNBC.
Welcome back to the call. You are looking at a live picture right there. The House Financial Services Committee is holding a hearing this morning focusing on the troubled credit and financial markets. The question being, is government regulation the best solution to ease the credit crunch? Well, we want to ask Eli Lehrer, Senior Fellow with the Competitive Enterprise Institute. Also, Mark Weisbrot, Co-Director of the Center for Economic and Policy Research. And rejoining us, we've got today's call contributors, Liz Ann Saunders and Alan Murray. Eli, I'll start with you. We see that this seems to become, or has become most recently, the cause du jour on Capitol Hill, with people rolling out different plans to try and address this liquidity crunch, the mortgage problem. Will more intervention by the government actually work?
Absolutely not. The level of intervention we've had to date is in fact the cause of some of the problems we have. Many of the interventions proposed would actually reduce the number of low-income homeowners while simultaneously providing bailouts to the already wealthy. They simply are not justified. Okay,
that said, Mark, where do you stand on this?
Well, I think, first of all, if you're worried about bailing out the wealthy, we put forward a proposal, and you can see it at cepr.net, where you could bail out the homeowners, especially subprime borrowers, low-income borrowers, by simply allowing them to stay in their homes and pay the fair market rent for those homes.
Okay, a lot of the people that took on these subprime loans, a lot of them didn't put any equity in to begin with. So many of them, in some cases, Alan Murray, will not even be losing all that much.
I really think we're looking at the wrong question here. I mean, yeah, new regulatory schemes aren't needed. Big bailouts aren't needed. Legislation, as often happens, might do more harm than good. But the question is, why were the regulators asleep at the switch in the first place? This is a regulated industry. Regulators were there. They saw what was going on. No money down loans, no doc loans, negative amortization, these balloon payments that were clearly going to blow up on subprime people. This didn't happen in the dark. We all saw it happening. And I think the big question that needs to be asked in these hearings is, why didn't somebody do something about it while it was happening? Why didn't the FDIC and the Fed step in and say, hey, guys, this is getting a little overboard here?
Liz Ann Saunders, do you think that the credit rating agencies were asleep at the switch on this one?
Oh, I don't know that they were asleep. It's just a question of whose hands were in their pockets and vice versa. That's, I think, the next potential shoe to fall. Look, I'm a believer that, the regulators are very good at operating the barn doors, and we know what that means. I think that ultimately what matters is the health of the economy, and I'm a big believer that overt regulation, particularly when it comes after the fact, doesn't help the problem. I mean, Alan's absolutely right. Where this was happening, we are already seeing the system eats itself by virtue of what 150 mortgage lenders are out of business right now. And if you look at where the big foreclosure problems are, ironically, it's in places like the upper Midwest, where we didn't have the same kind of boom. We didn't have the same kind of speculation. And what we have to be very mindful of is not doing anything to hurt the economies, because that's what ultimately will keep this problem from becoming a real severe crisis.
Eli, I want to get your take on President Bush's proposal to actually offer FHA insurance to credit-worthy borrowers. People that he says really are not necessarily subprime, that have been making their mortgage payments all along. It's said to affect maybe 80,000 borrowers all in. Do you think that could help reform things in any way?
I haven't studied the proposal in detail, but my initial take on it is that it probably isn't a good idea. These government insurance schemes always tend to grow, and quite often they end up being primarily of benefit to the already wealthy. So my reflexive idea is that it's not a good idea.
Mark, some final thoughts from you on this?
Well, I think if you're talking about regulators being asleep, one is the Federal Reserve. They had a responsibility to inform people of this bubble. It was very clear a few years ago, we wrote about it in several papers, that these home prices had risen beyond any price increases that you've ever seen, really, in the United States, and it was clearly a bubble. It was very easy to show, and if the Fed had simply stated this and explained it to people, we could have avoided most of the problems that we're seeing today.
Okay, well, our thanks to both of you, to Eli Lehrer and Mark Weisbrot. I appreciate you taking the time.
All right, back to work, back to school. August chain store sales figures trickling in, and in some cases, the results are falling short.
So the question being,